Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's February 11th. This will be our chart lesson for today. And looked like we were going to trade in a kind of a range today, but we ended up breaking out and trading a little bit higher and closing on the higher end here. So we're still working higher. We made a slightly higher high, definitely higher low, and closed higher as well. Not by much, but we did close higher. So we're still inching upward here. It looks like we're still in a range really overall at this point to me, but we'll see. We'll see how this thing continues to progress from here. But there it is on the daily chart. Um, you can see we traded lower. It looked like again it looked like it was going to be a range, and then we ended up rallying and closing higher. But let's flip over to the 2,000 tick chart, take a look at it, and go from there. And here it is. You can see we started out what looked like was going to be a range, but we broke higher here. We failed and quickly came back in, but it wasn't long till what we had, it looked like to me, was a spike in channel here, and we just continued to work higher. And you can see the corrections are getting tighter and tighter on the way up. It's like a spiral working into a point or something there. But really, what's happening is prices are just working around that midline all the way up there. And you can see it definitely prices are reacting to it all the way across there. So it's probably a little tighter like this in the end. I think my original drawing, I started from the low, but I think it's a little higher. And you can see there how it fits, and we even turned down at the high there. And we're just working that midline all the way down there. So I believe that's it in the end. I do it a little too steep in the beginning, but that happens sometimes, but it doesn't really change anything. We still end up with this. Really, you have to draw these shorter term patterns in here to really kind of keep you on the right side of the market. So that's important. Make sure you're always drawing those. Um, but let's zoom in here. There's not a lot of trades today. This won't take long. Volatility slowed down a little bit. Still choppy, very choppy, but the volatility is definitely slowed down somewhat. We got an interesting start this morning because you had a triple test right here and a nice signal bar, and there's also a new low right here. It's lower than that one, so you get a first entry, second entry. So that's a second entry if it breaks lower, but this next bar is an inside bar. And so that makes it a little iffy. If you really wanted to go short there, if you wanted to be a little aggressive, and I'm willing to give that a green, you're looking for a retest of the low regardless, and we tried to go higher 3 times there. So if it breaks lower, it's probably going to go down and test these previous lows, and it ends up going a little further than that actually. So if you took that, knowing it's a little aggressive, I'll give you that one. And then we drop down here, and you don't know that the overnight low is going to be here. It really turns out you could use this, but I just put it where it fits the best, and you can see that's acting as a midline all across there. It could have been a little lower like so. It fits maybe a little better there. Earlier, I think I played it right across here is where I originally played it. And it fits there, but I think, if you come all the way to the lows down here, it doesn't fit very well. So I believe in the end, it's much easier to find it at the end of the day after the fact than in real time. So at the end of the day, I think it's right there. And as the day progresses, you can move it around and test it and see if you can find the right fit. But I believe this to be it. And the original breakout fails, and we bounce off. We create a trend line here, and we just keep working up that midline all the way up, and we end up breaking out. In the end, the range, it kind of switches from the range, and you can see the range coming back into play here as support now. So I do believe they're both patterns are valid. But anyway, maybe you take that trade and you get your break here of this channel and 2 legs down, and then we start higher here. I don't really see a good setup here. There is a second entry. It's an inside bar. I'm just not crazy about that. It looks too congested. It is a second entry. It is a higher low, but it's not a very it's not a sure thing. So I wouldn't take that trade. So I'm not going to mark it. Um, if you took it, it turns out to be a goat takes off, but the next time you take that trade, it'll fail on you. So you just got to be careful with it. Um, anyway, then we start working sideways here. You get a second entry that sets up here, but you can see how congested that is. Does this bar qualify? Probably, but it's right into this midline, and we hadn't been able to get through that yet. And it's limited room to get out there. If you took it, maybe it works. See, it looks like it's going to be a one-tick failure because there's just not enough room to scalp out there. So I wouldn't take that trade. I'd just sit here and wait, and then you get another, at least a quadruple or triple test right there, and it's a decent signal bar, and you got plenty of room this time, and that's an easy scalp. And it just continues to chop sideways. And there was a news item here. I can't remember what it was. I want to say it was a speaker or something. It's something we don't normally mark. I can't remember what it was. But anyway, there was a news item here. It's fallen off the list now, but it doesn't really matter. There's no setup here. You would have already been out of this trade, and there's no other setup here until it gets up here and tries to go higher multiple times. You get a second entry short here with a pretty good signal bar. It actually breaks higher and fails and turns down. You could trade that on the engulfing bar because that's mostly green, but I'd probably wait for that to close. And most of you, 99% of you, should always wait for an engulfing bar to close before you trade it, because if you don't, you'll probably end up getting burned. But anyway, we make a run down here. You get a first entry and a close outside this channel here, and you also get a failed break lower. You had a failed break lower, a failed break higher. So this one is less likely to fail, but since the channel plays out, I'm going to treat it like a failure because I'm going to treat this as a new high here. This is just sideways stuff. So it's a first entry, second entry, nice signal bar, way away from the EMA. I'm going to take that one. Turns out to be a nice move. And then we're just chopping sideways again. And I don't see anything in there that I would risk going long on or short. And then it breaks out and it just takes off. Now, by the counts, this is a second entry. The signal bars doesn't really qualify regardless, but I wouldn't count that. This really looks more like congestion to me with a little failed breakout. And you can see that there. I don't see that as two legs or anything. If it was a real strong trend day, maybe you take that if you have a good signal bar, but not the way it sets up today. It turns out that it was fine. It takes off, but you just don't know that. And it looked like we were going to turn down right here at the overnight highs, but it pushes on through and fails. And this one was very tempting. But you're way away from the EMA, but there is some concern that you have not closed outside this trend line yet, and you don't have a new high yet. So this thing could push higher easily, but it makes a perfect second entry, or I'm sorry, perfect double top, and it's definitely considered a lower high. It's a very bearish bar. You're still a long way away from the EMA. You just had what looks like a failed break out of a range. So saying all that, if you took that and realizing that it's risky, maybe you take that trade. You're definitely taking some risks there, but a lot of times when these failed breakouts turn out to be very important highs and lows. This one didn't. Now this one here, you can see turns out to be an important high because you get two legs down from there, two nice size legs. So that's a very nice move down. And sometimes these breakouts that fail will be the high or low of the day, and you want to try to take advantage of that if you can for that reason. But you got to be careful with them, and you got to know what you're doing. But we're working along here, and then we're just in a trading range, and I don't see anything in there. And you get a breakout that fails in a big bearish bar. You're always better off to wait on the lower high, but you may take that trade. If it breaks lower there, it's probably going to come back down and test the lows, which it does. And it tries to go a little lower and fails and turns right back up, comes back up, makes a new high, tries to go lower, comes back, tests it again, and then turns down. You get a nice signal bar there. And you tried to test that multiple times across there. So I like going short, just playing the range rules again. And it's probably going to come back down and test these lows at a minimum, and the bottom just falls out of it. So that turns out to be probably the trade of the day if you didn't take this one here. And off it goes. Looks like it's going to try to bounce out of there, and boom, it just drops even lower. And runs all the way down, makes a low down here, and sets the trend line. Then we confirm it probably 1-2 more times, at least one more time anyway. No more shorts in here. It's getting too far away from the EMA. And you can see you try to go short twice. So you really could almost count that as a triple test of that trend line. It's at least a double bottom, a higher double bottom. So I like going long there. You're still way away from the EMA. It's not a perfect signal bar though, so I think it probably close enough. And it's not a perfect triple test, although I would say it probably is a triple test of that trend line. So if you went long there, again, it's a little aggressive. It's real close to being blue, but there's some reasons to be concerned about it, as I just discussed. So, I mean, that was a strong move down. So it wouldn't be completely out of the ordinary for it to break higher and then make another move down there. But really, it confirms the trend line here, and that's why I like it, because you got your first two swings, and then this just touches it and confirms it again. And being that far away from the EMA, and this thing just rockets off. So that's a really nice move, and you could have ridden this all the way up, and you wouldn't have gotten out until it broke below there. If you follow the rule that I usually suggest, is wait till you get your first bearish bar that closes outside, then put your safety stop below it. If it goes below it, you get stopped out, then so be it. If it doesn't, it keeps going, then you can wait till you get another place to set it and move it again. Keep locking in profits as you go, and try to get as much out of that runner as you can. But I like going short here too, because it's right off that midline. We've got a trend working up. You get a close outside. It does make a new high, and that's also a second entry short. You got a double bottom here, so first entry, second entry. So a break below that, being that far away from the EMA, you're probably going to get at least a scalp, and you end up getting a little more than that because it drops on down. You probably could have got a few points out of a runner there, and then it just starts going sideways, so you would have wanted to exit there somewhere. I don't see any longs here. You do get a triple test, but signal bar is no good. But you get a high or low here. Now, is that a perfect signal bar? I'm not sure, but it's 4 ticks. I know it's very low risk, and it closes. Is that in the upper third? One more tick higher than it is for sure, but where it is, I'm not certain. So I gave it a green, but I like that trade. It's somewhat of a reversal type pattern. You're looking for prices we're coming off the lows here. And you can see you got a good solid bottom there. So it's somewhat of a reversal pattern. So I like going long there. And once again, that's a great trade. Look at it go. And you get a close outside and a couple swings to a new high. And then it comes back here to the trend line. You'll probably say, why didn't I take this? You could take that. It's a 1, 2, 3. It's like a fourth entry. So you're making higher highs and higher lows, although you do have a close and a close outside and a new high. If you took it, it works. There's exactly 6 ticks there. So you can scalp out of that. But I just don't. It looks too congested across there. But you got 1, 2, 3, 4 bars already stacked sideways pretty much. At least one of them has no body or a very tiny body. Then you get another one here. So it's kind of risky going short there. We are a long way away from the EMA. And once again, you may treat this like a failed breakout. At this point, you might have moved this line higher. Maybe somewhere right along there. And so you're going long right into that. So there's some reasons to be concerned about it. So I marked it green. Once again, it just rockets off though. and it goes straight to the high side of the range, or the channel, I'm sorry, and turns down, but you don't get a setup. And then you're just chopping sideways, and there's just nothing there. Nothing that I would risk. There's no room to scalp out on anything so far. You get a little breakout that fails, but you're in a channel here, and you may get a breakout and close outside a new low before it goes higher again. So I don't see anything. This would have been a nice setup right here. It's a clear, easy second entry, but it's really like 4 minutes after 2:30. I mean, if you took that, I've always said, if you can get a trade in the first minute or two that sets up and looks like a sure thing, don't be afraid to take it. Just much after 2:35 or so, don't take any more trades, and just be careful after 2:30 at all. But in that case, that's very tempting to take. If I'd have been trading at that time, I'd taken that trade. I wouldn't have been afraid to take it at that point in time. So, and it turns out to be a nice move. And that was it. So not a lot of trades the last couple of days. Again, the volatility slowed down a little. It's still a lot of mixed trading in here, sideways, tight ranges and stuff. And that's just the way it's going to be most likely until this market figures out what it's going to do and what the economy is going to do. I think people are still really concerned about the economy. Our new president's making a lot of moves to improve things, but we may feel some pain before we see any improvements. Just about have to. So I think the market's still a little nervous. So there's still a good chance we could have a correction here. But anyway, there it is. Hope you had a good trading day. Again, there's not a lot of trades there today, but there's a couple that were pretty good setups that were if you've got some experience, you should be able to find, and they're good moves. And so hopefully you at least found one or two of these. And that's why you only need one or two trades a day. And nothing will kill your trading more than over trading. So the idea is every day there's at least 2 or 3 or 4, a minimum of a couple anyway, of sure things. And the idea is to be patient and wait and let those come to you and then jump on them. And once you start to be able to do that every day and consistently make money, the idea is not to take more trades, because every time you take a trade, you increase more risk of a loss. So you want to take the sure things, a couple of 3 or sure things, and instead of taking more trades, when you get ready to make more money, you increase your leverage, and you still just take 2 or 3 trades a day. That's all I ever take is 1 or 2. It's rare that I even take 3 trades. Usually 1 or 2 trades and I'm done. I meet my target and I'm happy and I'm done. I don't get greedy. I don't keep saying, well, I could make more money or I could get rich. The idea, this is not a get rich quick scheme. It's to make you a salary, and you can make a nice salary, because you can get to where you can trade 20, 10, 15, 20, 25, maybe even 30 contracts. 20 is all I trade. Anytime I get over 20 contracts, my brain goes to mush and I start making mistakes and I start losing again. And that's the other part to this that I'll say before you get all excited about increasing your leverage, is you have to increase leverage very slowly. And the reason being is because you got to get used to each level. Because it's tough when you're sitting there with 20 contracts on, and every tick against you goes 20 ticks. So that's 5 points. Every tick that goes against you, that's 5 points. So that's $250 for every tick that goes against you with 20 contracts. And just do the math, whatever number of contracts you want to think about, and think and picture yourself trying to trade that, and suddenly you're down $500, $1,000, $1,500 on a big bar. Can you handle that pressure? And that's what happens. That pressure jumps on you, and you start thinking, oh, I got to get out of this trade, and you jump out of the trade, and it turns out to be a winner. Or it takes off, and you're making a bunch of money, and you see this big chunk of money, and you say, oh, I'm going to let it go further. I'm going to make more. And then suddenly it turns and dives, and you give it all back. So that leverage can really work on you mentally. So you have to increase it slowly. It took me a long, long time to get to 20 contracts. And I've tried a few times in the beginning to go higher. And one day I said, it's futile. Why beat my head against a wall? I can make all the money I need to make trading 20 contracts a day and taking 2 or 3 trades. So some days I only get my scalp on a couple of 3 trades and I'm still happy. But other days I get a runner and I might make, you might get a 20-point runner or a 30-point runner. It doesn't, when you're using 5, the way I do it, I scalp out 15 and I use 5 runners. So 5 runners, if you get a runner that runs 5 points with five contracts, well, that's 25 points you made. And if you can get 10, that's 50. Just do the math, and it suddenly it adds up, and it erases all your losers and adds a little more gravy to the pot. So the runners can really change your math. Now I'm going to tell you early on, when you can only trade 1 or 2 contracts, if you can only trade 2 contracts, you're better off just to scalp out, because the problem is you're even on your winners, a lot of times you're not going to get a runner, and you're only going to win with 1 contract. So you're going to get 4 ticks on that 1 contract, and then you're going to get stopped out on the other. And hopefully, definitely at least trade break even +1 on those, so that you at least pay for your commission, so it at least makes a full contract profit on one of them. But if you have a loser, then you lose 2. So you win 2, you lose 1, you're back to scratch. And so it's really hard to do it with 2 contracts. Over the years, I've learned that 20% of your runner, you should scalp out 80% and keep 20% for your runners. And the only way to do that is to be able to trade at least 5 contracts. And then you can scalp out on 4 and leave 1 for a runner. And then you don't kill yourself with losses. So keep that in mind, and always work for if you can probably do it with 3 contracts, because I did. But when I really discovered that 80-20 rule a little later on in my trading, and that's when it really took off for me. That 80-20 rule is pretty important. And when I say 80-20, I'm saying you need to scalp out 80% of your contracts and save 20% as runners. And it takes 5 contracts to do that, to have a solid 80-20 scalp runner ratio there. So keep that in mind. It'll be very helpful to you. You can try it with 3. If you're not having any success, just go back to scalping out. Just scalping out in full. Because you can get a really high win rate on scalping out if you get good at reading the chart. Now, it's not easy. It takes time. It takes more time than most people want to give. It takes more work than most people want to put into it. But if you can make it, that's what it's hard for me to get people to understand that. Think how hard it is to be a doctor or a lawyer. All the years you have to go to school, and you're paying money to do it. You're in debt when you get out, unless you're lucky enough to have somebody that pays it for you, and most people don't. So most people that get out of medical school and law school have debts. It takes them a while to pay those back. And so, but think how long, to be a medical doctor, it's a minimum of 8 years. And then if you want to specialize or go into something else, it might be 10 or 12 before you're making any real money. And so you can do this. Imagine putting 8 or 10 years into it, and then you get out and you can, with half the stress, half the work, half the problems, half the money that you have to put into it, working from home, working when you want, and you can make more money. So you have to look at it like that. And that's what I try to tell people. This pays better than being a doctor or a lawyer in the United States, if you're good at it. So don't expect it to be any easier than becoming a doctor or a lawyer, or everybody would be day traders. There wouldn't be any doctors. There wouldn't be any lawyers, because everybody'd be a day trader, because it's easier. But anyway, I hope that makes sense. I hope I'm not just rambling here. I hope I'm hitting home with these thoughts with somebody. Um, I never know, this stuff just comes. I never plan any of these talks that come up. I just start talking about trading, and it kind of comes to me naturally and never fails. As soon as I say it, somebody will write to me and say, "Man, you sound like you were talking directly to me. Everything you said was directly to me, and I needed to hear it, and it hit home." And so take that with how you want, but it seems like every time I have these, what I call my soapboxes, when I get on my soapbox, somebody always writes back to me and tells me thanks because they thought I was speaking directly to them. So, but anyway, hopefully that stuff's helpful. Hope you had a good trading day. I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.